I'm so glad you're with us here on the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you to make better financial decisions in your life. And I hope you had an absolutely wonderful weekend. I'm going to start this week off with some basic financial advice. What documents should you hold on to and for how long? Also, we want to help all our elderly relatives and friends avoid ripoffs. I read a list of great questions to help you start the conversation, and I hope you'll stay with us to hear about how you can be of service to protect our older relatives, loved ones, and friends. So this is something that different organizations, personal finance kind of outfits, publish lists. Usually once a year they'll update what you should hold on to, what you should get rid of. And we distilled it down months ago, the things that you should hold on to. And I sold a car recently, and gosh, I should talk about what the selling process was like most recently. But selling a car, the more you have of clear information about how the car was maintained over the years, the records, that kind of thing, is so great. If you have a loan on a car, you want to keep good track of that loan. And you want to make sure that payments are being properly reflected. And now so often, loans no longer have a coupon book. It's all digitized. And so you're able to track that loan payment and make sure that payments are being properly reflected. And I have an app on my phone. There are many of these available that are free where you can do your own calculator on your loan, just as I talk about with mortgage amortization schedules, where you're able to make sure that the payments are properly reflected as they should be on a timely basis, that the balance is declining as it should be. If your loan is ever sold, just as I talk about with mortgages, you're able to track with that AM schedule, make sure everything is as agreed. So once you've paid off the car and you've got a clear release of the title, you don't need those records anymore on the loans. But the maintenance records, please do the maintenance as you're supposed to, because it will give you more longevity with your vehicle. And it's really good at the time you sell to show, because people are buying a history when they buy a used vehicle, to show those records. And when you go to sell your vehicle, whether to trade in a dealer, to a place that just buys vehicles, which pretty much any dealer does now, they want your inventory on their used car lot, your car in their inventory. Selling to a private individual, whatever, get that car clean as a whistle. Now, many of us are not the neatest people in the world. I wouldn't point at myself, but it would be true if I did. And so getting a vehicle thoroughly detailed before you start trying to market it for sale, really important. A junky-looking vehicle looks really bad. If a vehicle has 5 or more years on it and there's minor dents on it, you don't need to repair those before you sell it. But if a vehicle is younger than that, particularly if it's 3 years or younger and you're getting rid of it and it has dents and dings, scratches, getting those repaired usually will get you enough better value for the vehicle. You should do that. Insurance policies, what I do is every year a policy renews, I throw away the old insurance policy documents, and I only have the new year, but I keep those. Some people only deal with their insurance company digitally, and so you can keep a PDF of the policy. So if there's a situation where you're trying to figure out if you're going to make a claim or what's covered. You have it that way. If you stored that as a PDF on your computer, I keep the actual, I have the paper documents sent, and I keep them for the most current year. When I'm done with the policy, bam. That's just trash in the way in your life, debris in your life that I get rid of. Going back to the mortgages, mortgages are routinely sold, and the lenders mess them up when they're sold. So when you take out a mortgage, you have a known interest rate, a known term, you want to print out an actual amortization schedule. I know a lot of people don't even have printers in their homes routinely anymore, but at work maybe you can print it out. Amortization schedule, won't take up a lot of space. I want you, when you get a monthly statement, if you do from your mortgage lender, which many people do, I want you to check the balance you should have on your loan that your amortization schedule shows versus what the lender is reporting to you as the balance. It's crazy how often the lenders mess that up. Now, it was much worse in the aftermath of the banking scandals with all those banks being merged out of existence and closed and all that. And I was getting complaint after complaint from people that their mortgage balances were all messed up. But you want to check the bank's work. Don't assume because it got spit out by a computer it's going to be right. You are the one that needs to track it. The information on your balance is really easy for you to keep track of. And when your loan is done, I want you to keep the document that shows that your balance is paid off for as long as you are alive, or until maybe you've sold that property and it's out of your life. This is an old story that happened during the aftermath of the banking scandals. I had a loan that had double mirrored on me. When the bank that had the loan went bust, the balance was still hanging out there. I had to go through all kinds of stuff. Eventually, I had to hire a lawyer to clear it up because the banking crisis so messed things up that it showed the amount doubled that I owed, and I was selling the property, and it was a huge problem that I had to get resolved. Just terrible. Rental properties, not a lot you need to keep from those. I'll skip that. Tax returns, really important to me. You keep your documentation, your supporting stuff for your taxes for a minimum 6 years. 6. After 6, I keep a copy of the return itself. I keep it on a disk. Gosh, that sounds so antiquated. But I keep that, and the supporting documents, by the 7th year, those are gone. Now, I've got more information about what you keep and what you toss at clark.com. And the article is simple enough if you pop it in our search box. Which documents should you keep and for how long? And there will be some differences from our list, from others, but they all follow a lot of the same gist of what you should keep and what you can toss. And you want to be efficient in this area.
All right, we'll go to questions. Gary in Ohio wrote in and said, I've been listening for about 1 year. My father-in-law told me about you, and I love the show. My question is, are there tips for people working in a factory making $24,000 to $25,000 per year? I'm hearing a lot of if you have money, you can make money, but not too much for paycheck to paycheck poor folks.
So, Gary, thank you. And this is a very relevant question you asked me. So what I like for you to do, if you're truly living paycheck to paycheck, you don't have savings, you don't have money in a retirement account, I don't know whether you have access at your employer to a 401k. But if at the factory they offer a 401k, that would be a high priority for you to squeeze what you can out of your paycheck to go into it, because employers usually will have a match, and I want you over time to get to where you're grabbing that match. So if that's your situation, then I'd like you to take 1 penny of every dollar you make, 1% of your paycheck, put it into the employer-provided 401k, and pick up the match they'll offer. They'll match likely 1 for 1 or 50 cents for every dollar. That's like found money that starts to put some breathing room in your life. And then every 6 months, see if you can get by stepping it up another percent. If you gradually, steadily can keep boosting that and pick up more and more of the match, over time, you'll start to have that money that you'll be amazed that will be there and will grow over time between the employer match and what you are contributing. So let's say you don't have a 401k where you work. I'd like you to start doing a split deposit with your paycheck automatically and put 1% of your paycheck into a savings account and the rest of it go into your checking account. And then again, every 6 months, step it up another percent until you can't make a go of it with your day-to-day bills, your ongoing obligations, and then that's your cap for what you contribute into savings.
When you say a savings, at a certain point, would you recommend shifting that over to a Roth or traditional IRA, or?
Well, I mean, crawl before you walk, walk
Right.
before you run. So let's just get through that. If you're able to get to 5 cents of every dollar, which would be 2 years from now. Let me hear from you again. This is if you don't have the 401k with the match where you work. And then we'll think about whether the Roth would be appropriate at that time. But for the next couple of years, I just want you to be in the habit of diverting money into a savings account and start to build up money there.
This is from Sarah in Hawaii. I received a bill that appears to be a scam regarding my hospital bill from back when I gave birth in July of 2023.
Well, congratulations to you on
Yes.
birth of your baby last year.
Do insurance or hospitals sell your information?
They don't, but hospitals have been repeatedly targeted by hackers. Hospitals may be good at providing medical care. They are absolutely lousy at securing patient records. So it is very plausible that a criminal ring hacked into the records, has them, has your social security number, all kinds of other stuff, knows what you were in there for, and it could be a phony balance bill that you're receiving, and you are right to be skeptical of getting a bill this much later. It happens. I mean, people will get a medical bill way after the fact, but your suspicion likely would be proven out.
And Art in Nevada says, often on your podcast, when answering a question, you will refer to some TV work. Exactly where is this work? I'm guessing many other people would also like to see it.
So I've been doing TV on the evening news for 33 years now, and my TV work has been syndicated on a number of TV stations around the country that air me. They choose which newscast to put me in. Some air me in morning, evening, whatever, or both.
As a consumer reporter.
As a consumer reporter. And I air 5 days a week. Some stations re-air me on the weekends 7 days a week. And you're in Nevada. I don't have a TV affiliate in Nevada. I'm on from Seattle to Boston and a number of places in between. And you tend to know because, you know, they do regular promos for me being in the news. And so I've got a number of stations that air me. The requirement of them is they have to air me every weekday. They have to air me 5 days a week if they're going to carry me. And so if I was in the Las Vegas market, which I was on when I did syndicated radio, I was on the Las Vegas market for decades, but have never been on a local television station affiliate in Las Vegas.
And you were on HLN.
Oh, I was on
time.
HLN and I did stuff on CNN, but I had a show on HLN for a number of years. And so now, instead of that, I do this television syndication deal on the news. So that's why you can't find me, Art, in Nevada, because I'm not on there. It was funny, when I used to go for book signings in Nevada, I never went to Reno, but I'd go to Vegas. And my book signings would typically be not at a bookstore like they'd be in other cities. They'd be at a casino. And I'd be driving up to the casino, and I'd be on those big things like with the people doing the shows. And it was so funny. I don't have any pictures anymore, but it was funny when I had a picture of me. It was like how many feet high on one of those boards. Las Vegas is a different kind of place. Coming up ahead, we're going to talk about helping your parents with money, helping aging relatives or friends with money, how you can help them to stay out of trouble because the crooks are looking to come raid their wallets. You wonder who is without conscience, who specifically targets the elderly to steal their money, to scam them. But there are people who are sociopaths who know the difference between good and evil, and they just don't care. And so older people are repeatedly swindled, billions of dollars stolen from the elderly. The best guess is somewhere between 3 and 4 million of the elderly. That's our relatives, your relatives, friends, all that. Millions of people are having billions stolen from them each year. Kiplinger reports the average amount stolen from an elderly person when they get conned, just under $35,000. Now, you think about how many older people live on a fixed income. That $35,000 on average stolen from them is a brutal event in their lives that may be hard to ever recover from. I have had the privilege over the years to speak many times to AARP audiences and discuss scams and what they need to know and why people need to be nosy with each other. And so with an aging parent, this is especially hard for an adult child with an aging parent who loves his or her independence. They want to maintain it, and they don't want you nosing around. You got to be nosy. You got to be nosy. And one basic thing not involving scams, it's really important that an adult child have a durable power of attorney, and at least, if not that, at least a durable power of attorney for health care. If a parent cannot speak for themselves because of a medical event, having a durable power of attorney for health care is really important because it allows you, as the adult child, to represent their wishes as best you can. Now, many states have a statutory kind of form that's state-specific that you have to fill out. These are available online, really simple to do. They're free. And I remember doing one with my late mom, and I asked her a bunch of questions. I didn't know how she was going to answer them, but the state form that I had to use with my mom had, in this situation, I'd like this to happen or not happen or whatever. And so it allowed me to honor her wishes. And I remember when my mom had a heart attack that took her life, but she was basically non-responsive, and I was the one on behalf of my siblings that had to decide what to do, and that was a weighty responsibility. But I already knew from what the choices my mom had made what she wanted done. Really important to do. And along these lines, communicate. Know what's going on. And if you have this sense that your parent is dealing with some slow but steady cognitive issues, you need to be prepared to be extra nosy in your parent's life. And these are, I'm talking about tough stuff here. Tough stuff. But if there are meaningful assets, is there a will? Has there been a plan put in place? And you want to make sure that someone, whether it's you or a sibling, is monitoring your parents' accounts. Because as I've shared over the years, my mom was getting ripped off by phony pretend charities, stealing her money. And we were able to put a stop to it, but not before, since we didn't have any of the four of us monitoring her accounts. She had real serious money stolen from her by these fake charities. So be involved. Be involved and know that your parent has a bullseye target on him or her because the criminals are targeting the elderly. And so you need to be involved because the consequences could be so bad psychologically and financially. And I know this isn't a happy topic. I know I'm not talking about, let me tell you the great deals that are popping up to Europe, and let me tell you how wonderful they are. No, there are times in life that we've got to talk about serious stuff. This is one of those times.
All right. Donna in Florida wrote in and said, my grandson is due to receive $350,000 from insurance after he was in an auto accident.
Oh, I hope he's okay. I'm sorry about the accident.
I'm looking for advice for him on what to do with the money long term. He's 17. Should we get him a financial planner, put it in index funds, buy a rental property?
So, Donna, this is a from a bad circumstance, an accident. This is life-changing money at 17. And if that money goes into index funds or the exchange-traded fund equivalent and is put aside, it'll have very favorable tax treatment. And it will set up your grandson financially for, I mean, he'll already be set for retirement. Because at 17, you figure that money will double invested in index funds probably every 8 to 10 years. We're talking about a huge amount of money and enormous financial security later in life. Even if it was, let's say, at age 30, your grandson wanted to use money at that point to buy a house, capital gains rates very favorable. That money will have hopefully grown quite nicely over the next 13 years. It'll be a lucky, not unlucky 13 years. Some of the money can be used for that. The advantage of having that money in index funds or the ETF equivalent is that they have virtually no cost to them and the tax treatment so favorable and the money's well diversified. If it's in a total stock market index fund, we're talking about in thousands of different stocks spread across the economy of all sizes of publicly traded companies. It would be fine to hire a fiduciary fee-only financial planner to make a recommendation about what would be a proper financial plan in terms of taking this huge amount of money and making it as advantageous as possible for your grandson as it could be. But you got to make sure that it's a fee-only fiduciary, and I've got information about how to do that so you don't end up with some salesman pulling some stunt at Clark.com.
Pension Hopeful in Georgia says, we have heard about pensions going away, but I have an interesting situation. I'm interviewing for a non-government job that would include a pension.
Really?
Yeah, I have never had a pension before and would love to take advantage. I currently save 20% of my income by maxing out a Roth IRA and putting the rest in my current company's Roth 401k. If I get hired, how do I work the pension into my current savings? Is this an opportunity to lower my 20%, or should I keep saving that amount? Also, should I be concerned about the company ending the pension and what happens to that money if they do?
Okay, so you just answered the whole question with your last statement. Companies, even that are still offering pensions, have been terminating those pensions. I think we're down to 7% of private employers, 7% of workers working for private employers have pensions at this point. It's teensy tiny.
I can't believe it's even that much.
Yeah, it seems like nothing, right? No, there's still some out there that offer pensions, but it's been obviously the trend line has been clear, and the trend is not your friend, that companies are eliminating their pensions. So for you, you've got such good savings habits now. This is fantastic. You're saving 20% of what you make. Later in life, if you end up working for this company a really long time, they keep the pension in place. Later in life, reduce how much you're putting towards retirement accounts. Because the big benefit now, as you're young, you've got more runway for that money to grow. You've got more flexibility because you've saved that money. And if the pension really does stay in your life and become a big financial cushion for you, then later reduce what you're saving.
Glenn in Utah says, I've had AAA for years. 2 months ago, I called to have my F-250 truck with a camper on it towed 3 blocks to my mechanic. The starter was gone. I also had purchased the Premier RV coverage. When they came out, they said it was too big for their truck. Sorry. When I spoke to the dispatcher, he informed me that AAA was mostly for cars, not trucks. But if I found my own tow truck, they would reimburse me if it fell within their policy. I felt a ripoff coming. So I made some calls and found out that my insurance company provides this service for free. I just want to help out my fellow listeners and fellow veterans who I know listen to you.
Well, Glenn, thank you for your service to our great nation and the U.S. military. AAA is pretty much a monopoly on towing services in the United States. And we hear a lot of beefs about it. AAA has put in a lot of caps on, even if you've never had tows in 20, 30 years with AAA, suddenly you may have a problem vehicle and they'll fire you. Now, there are different AAA affiliates around the country. Different ones have different policies. So I don't really love for you to have filed a tow claim with your insurer, but in this case, I guess it made sense because you were stranded there with it. Would AAA have reimbursed you? The message you were given is maybe, maybe not, even though you were paying extra for the premier product that your AAA affiliate offers. And this is the problem, is that you have been paying for something, paying an enhanced premium for coverage, having a big pickup truck pulling an RV, and then when the chips were down, they weren't there for you. So the question is it worth being a member of AAA, believing you're having peace of mind? Or would you be better off for the small number of occasions that you need a tow to pay for a tow? Now, I joined AAA and have remained a member for a different reason. I've stayed in AAA because of discounts I get being a AAA member. But in my mind and my experience, the towing service has no credibility at all anymore because of all the ring fences that AAA has put around the tow. Well, I want to thank you so much for joining us today, and I love having an opportunity to share with you, to hear your questions, and to answer them. And remember, what we're all about is you and your wallet. I want you to learn ways to save more, spend less, and avoid getting ripped off. And we'll see you tomorrow.